So to start off, just describe briefly what is Skillz for people who aren't familiar with it.
So Skillz is building the competition layer for the internet. We're the leading mobile esports platform in the world, and that means we're a B2B2C technology platform enabling developers to build better competitive mobile video games. And in terms of the consumer side, we have a player community that engages in 62 minutes on average per day, seeking out fair, fun, and meaningful competition on our platform. This year, they'll play about 2 billion tournaments on our platform.
And of course, you've agreed to merge with Flying Eagle Acquisition Company. So you yourself are being SPAC'd, as it said, or you are deciding to SPAC. And this is, of course, the entity that helped take DraftKings public itself via this method. Gaming is its expertise, but Andrew, why have you decided to go to the public markets in this way?
So when we started the company 8 years ago, and when I came on 7 years ago as CEO, we had always planned to be ready to go public by Q4 of 2020. And the SPAC route and COVID sort of both fell into place over the past 6 months. As you guys are probably aware, the video game industry has seen exceptional growth due to COVID, and Skillz also, we had the best quarter in the history of the company in Q2, and the SPAC route. Thus, we were further along in our plans to go public than we had anticipated a little bit earlier.
Yeah.
And the SPAC route allowed us to go public faster, and more importantly, I'd say, to choose our partners with a minimal cost difference in our case. We were able to get top-tier institutional partners to invest in the company via PIPE, or private investment in public equity. We had Wellington, Fidelity, Franklin Templeton, and Neuberger Berman all participate in the PIPE. And when I think about why go public this way, in our case, we have these great long-term institutional investors investing in the company and providing an exit for the venture capitalists who are already investors in their company.
Yeah, I mean, there's a pretty long list of names attached to this, legitimate names, we should add, and well-respected names. I am curious, though, about how some of those names or other folks maybe in your industry either advised you or just talked to you, I guess, about this process. I mean, did you sort of reach out to anyone, or did anyone reach out to you and sort of give you the lowdown on sort of what would be sort of the best avenue for Skillz?
Absolutely. So we had quite a number of SPACs approach us since the beginning of the year. We chose FIAC because of the incredible history they've had in running SPACs successfully, most recently with DraftKings, as you all noted. Harry Sloan, also the lead on FIAC. Harry is an exceptional media and technology executive. Not just with DraftKings, but his history is formerly CEO of MGM, the movie production company, and also as a long-term investor in ZeniMax, the video game company. So he knows a lot about our industry, and that was a major facet of this, was partnering with someone who really understands our business.
Joe?
I've heard that companies are basically engaging in things called SPAC-offs, and essentially that there's almost like this speed dating process going on between a company, all these SPACs going public, and the companies who are looking to go public. What's that process like, and did you talk to any other companies that might have looked to acquire you?
We did look at other potential suitors in the SPAC process. I think when you think about going public, there are a few different paths now available to companies, whether it's a direct listing, a traditional IPO, or a SPAC. In our case, when you evaluate the dilution against your ability to set up the company for the long term, for us, the SPAC made the most sense because we really view going public as an important milestone. It gives us greater access to capital. It enables us to grow faster, but we're building a 100-year vision. We've always believed that fair competition is something everyone should be able to own a stake in. And so going public has always been our plan. And it's really, we're 7 years for me, 8 years as a company in a 100-year plan. So for us, it's this is really just the beginning of getting public.
I mean, I've heard of 10-year plans, but 100-year plans is a whole new level, Andrew. Take us on that journey. Where do you want to go? What's this money going to be used for?
So we talk about the competition layer for the internet. And today, when you think about our business, we expect to generate $225 million in net revenue in 2020. We expect to grow that to $555 million in 2022. That's a 57% CAGR. And it's certainly something we're very excited about. But when we think about the business, when we started the business, mobile gaming was $8 billion. Today, it's $68 billion. Tomorrow in 2025, it's expected to be $150 billion. And when you think about the opportunity for us to capture market share and grow our business, it's pretty incredible as we look forward. And that's why we say it's so much earlier than it is late in this business, because there's so much ahead of us to do in terms of growing the business.